particularly we will focus on the FERS employee, is that most CSRS will be on the verge of retirement, and this would not be an economical product. FERS employee, we would definitely be talking to them about long-term care. The opportunity is very strong. Nobody's talking to these federal employees about a disability protection. And we've just received a letter from Jay Moyer that I will forward out to those folks on the call today that talks about and backs up what we're going to spend some time on about a North Carolina agent who followed up with GovDI products and ended up writing a tremendous insurance off the DI lead. One of the situations we have with the federal employee regarding disability is that if they have a disability, they must have completed 18 months of FERS service and have become disabled, and to prevent them from doing their current job in their current pay scale. And what we must realize is that if you look in the resource book to benefits, you'll see that they have to jump through many, many hoops to even qualify for their disability, and they have to be deemed that they're going to be disabled at least 1 year, and their benefits are linked to Social Security disability. So for a FERS employee in the first month of disability, they would receive 60% of their high 3 average minus 100% of any Social Security benefits they would receive. And after the first 12 months, if they were deemed disabled and they were collecting, they would be collecting 40% of the high 3 average minus 60% of their Social Security benefit. And so when we ask them if they could live on 40% of their income, the answer is always no. And so that's the lead-in to talking to them. Many of our federal employees have come from private sector where they've had short-term and long-term disability, and you might ask them about their previous employer if they've been with the federal government not too long and address the need for the paycheck protection. Jeff, let's go to the GovDI disability income brochure. And I am catching some feedback here this morning.
Yeah, again, for those that jumped on late, if you could go to listen only or mute your phone, we will open up the questions at the end here.
Okay. Basically, let's go to the first page of the brochure, and I think for folks that are either new to disability or new to the federal space, this is going to give you a good outline. Right there, Jeff. So the problem is if your disability is not expected to last more than 1 year, there are no FERS benefits. So if they went skiing and broke a leg and they're or battling cancer and they're going to be off less than 1 year, there's no FERS benefits. Your FERS disability benefits replace only 40% of your income in year 2 and beyond. And you might not be able to read the details, but you must have completed 18 months of FERS service and become so disabled that you are prevented from performing useful and efficient service in your current position. Useful and efficient service means fully successful performance of the critical and essential elements of your position. Your disability must be expected to last more than 12 months, and you must be applying for Social Security disability benefits at OPM, and we will not pay until the receipt has been approved. So you can see where there's many, many hoops to potentially collect. So the first 12 months, as I mentioned earlier, 60% of the high 3 minus any SSDI, and 40% of high 3 12 months and after with 60% of SSDI. Let's go to page 2, Jeff. Now the Social Security supplement with GovDI. GovDI is the GPM Life product that was designed to dovetail in to the FERS products. One difference between the GovDI and the Illinois Mutual product that I'm going to share with you is that on GovDI, if you are in fact collecting Social Security disability, the payment to you will be affected based on the amount of Social Security disability you're receiving. With the Illinois Mutual that we will get to, a portion, or what we call the base, is not integrated with Social Security disability benefits. So that's one conversation if you have both products available in your state. Currently, GovDI is in 27 states, and Illinois Mutual's in 45 states. GovDI, they're trying to approve more states as we speak. But from the standpoint of the Social Security disability, I think it's important that you have to make that, you have to let that potential insured know the difference between the GovDI and the Illinois Mutual. As the check is going to come for a portion of the Illinois Mutual policy, whether you're on Social Security disability or not. Premium-wise, the GovDI is going to be a little more cost-efficient in most cases. If you're applying for the GovDI, GPM Life has set it up very nicely where you can do the disability application along with the life application and run it through underwriting quite smoothly. So on this example, and what I would do is get a clean copy of this brochure, and I would have it to share with the federal employee. This really spells out what they have and what they don't have and why they should consider the GovDI disability program as a supplement to their income. So if in year one they were disabled, no Social Security disability benefits and no FERS DI, the GovDI income product would be picking up their income replacement. If in year one they had some FERS disability but no Social Security, you can see that it dovetails on top and a portion of the disability plan pays out. And the third scenario is that they're receiving some FERS disability, some Social Security disability, and some GovDI. So it's dovetailing in and picking up the shortfalls. In year two, with GovDI, with FERS disability and no SSD, you can see there's about half in the green and then half in the blue. So FERS disability benefits and GovDI. So we're picking up 70% of the income replaced at that situation. And in the same scenario, 2 years plus, if they've got FERS disability and are collecting Social Security disability benefits, they're still picking up a portion with the GovDI on their shortfall. So I think this is a nice piece that you can walk through. This is how we can fill the gap with this plan. Let's go to the next page, Jeff. The features of the GovDI-based policy is we'll supplement up to 30% of the income along with FERS and Social Security disability. But in year two and beyond, assuming we meet the requirements to the total disability defined in the policy, GovDI also provides 60% of their income along with FERS and Social Security disability in year one as a short-term gap-type program. They also offer a rider that will cover catastrophic disability, and you can purchase that as an additional, build it into the plan for an additional $500 to $2,000 of coverage. And what's interesting with the GovDI is that once they're disabled and they're on benefits, the rider will increase the benefit on the annual basis to keep pace with inflation. And you'll notice on the Illinois Mutual policy when we get there that that's a level benefit that does not increase once they're on claim. So it's an efficient, consistent, convenient, and flexible option. And if we're not talking about disability with these folks, I don't think we're providing them the service that we say we're going to provide. The last page of the brochure, if you'll move there, Jeff, is basically a worksheet that you can work through, give them the price of their different benefits and features, and build the plan. We are going to be getting with GPM Life after the first of the year, and we will be doing a specific disability program training for those of you on the call that are licensed with GPM, and you'll for sure want to be on that call. That call will probably be hour and a half. If you're curious as to whether GPM Life is in your state or not, send me an email and I can get back to you with what your options are for your states. If you're on the call today and you're in the state of California, I can tell you we do not have good disability carriers as an option at this point, and I would be directing you to a life insurance policy with critical and chronic illness riders, at least to provide some form of a benefit for a cancer, heart attack, stroke, or a long-term care stay. So unfortunately, state of California, this is information that you're not going to be able to use right now, but I'm told that GPM Life is trying to make their way in to California, but I don't have a good time frame for you. Jeff, if we could go to the GovDI sample illustration, please. There's some good statistics on the first page that you'll be able to go over with for the federal employee. If you go to the next page, please, Jeff. All right. Basically, I grabbed a 45-year-old male non-tobacco. He had a good rate class, and the monthly benefit was going to be $2,125, and the specified premium is going to be $76.10. Let me back up for a minute. Disability rates are calculated based on your age, whether you're male or female, whether you smoke or you don't, your occupation, and your income. So that's a little bit different as we put a plan together as to what they will qualify for. Very important if you're working in the VA with nurses, for example, we need to know, does that nurse work in the clinic Monday through Friday? Is that nurse in the ER room, or is that nurse a surgical nurse? Specific to what her details are and where her location is. If you're working with therapists, are they out in their car driving to clients? Are they going to satellite clinics? The more detail you can get about their occupation, the amount of time they've been doing that occupation, we're going to be able to get them in the best rate class so that we quote as accurate as possible. And what I've found is that some agents kind of shy away from promoting disability because they're not used to getting these details and going through the underwriting process. And if we can get you an accurate quote up front and you're presenting as accurate as possible, you will close more business. And it's been my experience with agents that have focused on annuities and life insurance that they just don't ask enough questions to learn about the career to get a more accurate quote. We could have a nurse in a 2A if she was in a high-risk area. We could have a nurse in a 3 or a 4A, depending on the circumstances of her career. So ask a lot of questions, find out about their health, obviously, and chiropractor use if they use the chiropractor. So just wanted to back up and kind of let you know what kind of questions you should be asking. But we know that 1 in 4 of today's 20-year-olds will become disabled before they retire. 8.5 million disabled U.S. wage earners were receiving Social Security disability insurance at the end of 2011. And 90% of new long-term disability claims are caused by illness rather than accident. And fewer than 5% of the disabilities are work-related. So when they tell you, I've got workman's comp, that'll take care of that, 90% of the cases that won't be true. The average long-term care stay is 31.2 months, and new applications for Social Security disability have increased by 27%, and about 100 million workers are without private disability insurance. And so this is an open market for us. When you're doing your intake and data collection, you're going to find that very few federal employees have an outside private disability program in place. They've not thought about it. Even though they've come from the private sector, in most cases where they had disability. It's just an overlooked scenario. I share disability with everybody that's 50 years and under, and if they're over 50 years, I'm talking to them about a long-term care protection plan. So we want to talk disability, not going to get rich off it, but it's definitely a door opener. Jeff, next page. Disability insurance industries reveal 1 out of 10 long-term disabilities actually resulted, and that's just a backup. We're going to have more illness than injury, and most people feel that they would collect regarding an accident. Page 4 of the illustration shows us what is an illness or injury. You're under the care of the physician. You're unable to perform your substantial duties of your regular occupation, and you're not gainfully employed anywhere else. So we'll send out samples of this. We're not going to take a lot of time to go over this today. The last page of the illustration, and then we'll move along. Basically, this particular individual qualified for $4,250 as short-term disability. They had a 90-day elimination period, and the short-term paid out for 9 months. So we can get a higher payout in the first year of disability, and then the base policy was going to pay $2,125 1 year out to age 62. So we really cover them for the lion's share of their working years. And in this case, we picked up an additional $2,000 of catastrophic disability with a cost of living adjustment rider. So you can build this policy up. You can shorten this policy and save some premium. You are going to take into account the amount of sick time they have built up, the amount of vacation time they have built up. Obviously, the shorter the elimination period, the higher the premium. The longer the policy is going to pay out, in this example to age 62, the higher the premium. In this situation, $76.10 a month. The lion's share of long-term care would be tax-free based on the amount of Social Security disability they would be receiving and so on and so forth. So GovDI is one choice that you'll have. Let's go to the one-page Illinois Mutual flyer, Jeff. And briefly, we'll just get this all out to you. Illinois Mutual is one of the few other carriers that are in the federal space. Not every disability company will write a federal employee. The features of DI with Illinois Mutual is that they're eligible, government employees are eligible for 30% of their earned income not to exceed $2,000 per month on the base benefit. This $2,000 of base benefit is not taxable. Even if they go on SSDI, this is tax-free money to them, and this is a strong point to the Illinois Mutual policy. The remaining $1,800 that we could put on the plan is integrated with Social Security disability. So for a higher income earner, Illinois Mutual write a maximum of $3,800 of benefit. $2,000 non-integrated, they get it whether they go on SSDI or not. The other $1,800 could be integrated, so that $1,800 on a max plan could be reduced or go away. So very strong plan, and when you explain the two, even though the Illinois Mutual may be a few dollars per month higher, in some cases your federal employee is going to pick Illinois Mutual over GovDI for that very reason. Let's go to the sample Illinois Mutual quote and go to the first page, please. This is about protecting your paycheck. And on the next page, Jeff, here's where I start with a federal employee. Your paycheck is worth protecting. Your current income is $99,913. at age 42, you have the age 67 potential to earn over $2 million. And so I spent a little time there, and you'll have these sample quotes. What's interesting about Illinois Mutual is you can put a retroactive benefit rider on for an accident. So if they do have an accident, their policy will retroact back to day one and offer them day one coverage. So for a $3,800 coverage on a 42-year-old with 60-day elimination period and a 5-year benefit, we're in the $78 a month range. So you can see that the Illinois Mutual policy is going to be just a little more expensive than GovDI, but it's all what your client is looking for. Illinois Mutual is in 45 states, so likely, other than state of California, that we can offer a plan to those federal employees. Jeff, were you able to get the workshop up?
Yes. Now, before we do this, I just want to make it clear that this has the old company name on it. So
we have put together and has been run through my broker-dealer, but we do have to get the Fed resource name here. But this is a program that you could do a lunch and learn. You could meet with a group of federal employees. Obviously, your information can be imported where my information is, and it would take you a brief 15, 20 minutes to go through this workshop, and this is available to you when you're appointed with the companies via Fed Resource Voluntary Network. Let's just go through a couple pages, Jeff, so they can see. We're running out of time here today, so just cruise through the details. We won't do this, but we can see that we've got a nice presentation put together that will get you in the door for some lunch and learns. Maybe you're going to be talking to a department, and you might be able just to be the door opener with this. And so it's basic information, but well-needed information. And this chart really shows the foundation of everything we talk to a federal employee about getting their house in order. Did you want to add to that, Jeff?
Yeah, I wanted to just say that we have used this read-along and approached HR in an introduction meeting to say these are the types of educational workshops and seminars that we can conduct for you. And we have used this presentation. So you may not be an expert in DI, but whatever opens the door, and we have found that income replacement is one of the least discussed problems to the federal employee, and HR probably hasn't heard this story before, so it may be an angle that nobody else is talking about. So I just wanted to add that, Terry.
Sure. And let's just continue to move along through here. And we'll make this available to anybody that is going to need it. And this just flows right along with the GovDI brochure. This is an interesting one-piece flyer that you can obtain from Illinois Mutual. And the federal employee might not be interested in protecting their whole income stream based on cost, but when you start to have the conversation of mortgage, utilities, groceries, and maybe even throw in their car payment, these are the things that keep them moving in a disability. And so you might not be able to get them to spend $78, but you might have them say, I have a budget of $50. What can I buy? And at least get their mortgage, utilities, groceries, and perhaps the car payment taken care of in a disability situation.
Yeah, I think that's a good one-pager. This is really the one that catches the attention of the federal employee. You got to keep it simple and help them identify exactly what would happen to them. And I know you've used this successfully, Terry, in the past.
Yes. I mean, I asked the simple question, are you aware of how your disability program works through work? And they go, really, no, I'm not. It's like, really, you don't really have one. Could you live on 30, 40% of your income, and that would be taxable? And they go, well, heck no. And you could pull this out and go, well, let's just take a look. How much is your mortgage? What are your utilities? What are your groceries? What is your car payment? And come up with a total and say, well, what if, we at least protect these items? And it seems to make sense to them because obviously these are the things that they have to pay for to have a place to live and survive. And when you can integrate some disability on a younger person, if you're catching them in their 20s, early 30s, new to their career, Illinois Mutual has a return of premium offering that may be attractive to a young federal employee that feels like they would just be throwing this money away. In the 40s and above, I believe that rider quits at 45, but it becomes inefficient late in the 30s. But if you're catching a young person, previous to my career with federal employees, I wrote a lot of farmers with disability, and I'd put all those 20-year-olds on with full return of premium and options to purchase and build up the disability so they would never outgrow their plan. And it was attractive, and they'd spend $7, $8 more a month to know that, hey, they were never going to become disabled and they'd at least get their money back. So different features for different types of programs we're trying to put together. My point is, if you can't get them on the full 3,800, get them something, because the opportunity to get it while they're healthy is so important.
Right, exactly.
Okay, and we should be towards the end of this quick brief. There we are.
Yeah.
Obviously, we're looking for an opportunity to get with them and do a report. So quick, easy, hey, I can get in, show you a little bit about what we do, and educate them on an opportunity that nobody's talking to them about. And we are at 9:31. Did you want to see if there were any questions quick, Jeff?
Yeah, absolutely. I have one question, but I'll open it up first. If you have a question regarding anything we just covered, you can go off listen only, and we can do that right now, or we have the chat button, the second to the phone button there. You can type it in there. The question I had, Terry, was on the GovDI through GPM here.
Mm-hmm.
Maybe you mentioned this and I missed it, but are they going to have the option for biweekly?
They actually can set it up through the allotment process, and so they, I believe, can do the biweekly. The GovDI has recently rolled out, so it's fairly new to everybody, and that's why we're going to do a specific training after the first of the year.
But Illinois, I'm sorry, go ahead.
GovDI has only been around a couple of months.
But the Illinois Mutual does have biweekly quoting.
Illinois Mutual would be through a PAC out of a checking account. They do not have the allotment process biweekly.
Oh, I thought they did. Okay.
So
I'm
other 90% sure we'll be able to do biweekly with GovDI. I just have run this on a monthly.
Okay, but they do it. Just so I'm clear, I want to make sure I'm talking to advisors. I'm clear on this. On the GPM life insurance, they have biweekly quoting.
Absolutely.
Okay, so I would think that they would have it for DI.
Yep.
But, okay, keep us posted on that. And we have any questions out there? This is a very misunderstood product and undersold. I'm curious if any of you that are on the presentation today sell disability insurance. If you could just give us a yes or no, I'd like to see, how advanced we are in the world of disability. I know that a lot of the frustration is because you can't get it through underwriting. I'd just be curious if anybody's writing it out there. I guess that means they're not, Terry. So we got
I know, that's why we have big shoes to fill, Jeff.
Yes, wow. Okay.
On Jay Moyer had sent me a...
Would you give a little background on Jay just so they know who Jay is?
Jay Moyer is our go-to guy at GPM Life. Jay does advanced training. If you've got cases that you need assistance with, you've got questions regarding how to design a plan so it's cost efficient, Jay will help you put plans together. Jay will actually help you work with a client if need be. He's a great resource. He is the gentleman that provided us with the training that we just last went through. He's going to be doing the GovDI training, and then we're also going to set up training after GovDI for the allotment process. We're just trying to give you well-rounded information on how all of this works. What I found is if you understand the product and you understand how to do it, you'll actually move more of the product than letting it sit in your arsenal and stay away from it. So expect to be overloaded with GPM Life training first quarter.
Well, we have one advisor out there that does write DI, Duke Carr. So,
yay, Duke. Do we have just a second? Jeff, I sent you over, and I don't know if you can grab it quick. Jay had forwarded me an email, and I forwarded it to you. GovDI Persistence Pays. I think we'd like to forward that out with the materials for the folks on the call today.
Yeah.
It's an overview of what started out to be a GovDI sale on a couple of 44-year-old postal workers, and it ended up being some tremendous life sales, and GPM Life and the consultant were able to save over time about $125,000 per person with the savings on the Fegley life insurance. So not only did they get the GovDI sale, they got nice life sales out of the deal too.
Okay.
So
you see that question from Tim Eason? He wanted to know
Tim?
if you could briefly explain what the FERS employee has through the government as far as their base disability.
Basically, they have to burn through their vacation time, their sick time. If it's decided on and they've applied for SSDI and they are going to be disabled more than 1 year and they can't do their current job at the current pay scale and they're going to be accepted for SSDI, they then can look to the FERS disability annuity. So basically, they don't have a disability plan. Once approved, they collect 60% of their income in year one, and in years 2 and out, they collect 40% of their income in disability.
Okay.
So they really don't have a disability plan.
And Pat Robson, he also sells DI, so through numerous carriers. And so we got 2 out there that we know sell DI. So they'll make your job a little easier, Terry, as you help train them.
Okay. So when we get the invite out for the GovDI training, I would hope that that will be a priority for everybody on the call, plus the folks that couldn't be on the call today, because Jay and I will spend probably an hour and a half to 2 hours on that training session.
Okay, great. So we'll get all that information out to each of you that attended the PDFs of the worksheets and the proposals that Terry went over, and also the testimonial. We'll send that out. So look for that from Joy today, and this will be added to the YouTube channel so that you can view it at your discretion. So I want to thank everybody for attending today. Good job, Terry, as usual. If I don't talk to everybody out there, have a great day, and we'll talk to you soon. Same to you, Terry. I'll talk to you soon.
Have a great day.
Okay, take care.